Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
New York coffee. I apologize for this, my messy and complicated daily chart. I assure you that it is necessary for me to interpret where we have been, where we are now, and what the opportunities may be ahead. Okay, so the pattern construction that led to the market moving higher started in between mid-March to early May with the dark blue highlighted bullish shift pitchfork. This pitchfork is still operational with the market today in between the dark blue middle time above, currently at 265.90, and the dark blue lower time below, currently 236.5. I'll go into further details about the very recent action shortly, but first I'd like to highlight some other larger and longer term patterns. In this I must discuss the large bright red April to date breached ascending wedge pattern, currently 242.40 to 266.25. This pattern has been biding its time since late spring, including a false break higher over the middle to end of September. Now there's one more pattern to highlight, an early August to early September bullish Andrews pitchfork, but this one has now been retired as it no longer fits the version of pattern, also does not work. Okay, so the break higher up and out of the bright red large ascending wedge pattern seemed to be a key event, and I even went into depth on this with potentials topside 2 weeks ago, and I quote, "If this break higher is sustained, then it does look right now that we would have a primary target X in the 307.40 area, which is at the moment above the high of my current daily chart, and also have a secondary harder to reach target X1 up in the 333.55 area, an area that is very high up off my daily chart. It all matters if this move up is sustained or not, and for now the question is still somewhat open." End of quote. Well, since then the move up has been seen to not be sustained, capped by the July 2011 high at 271.85, and prices have headed back down, leaving us with a mid-September to early October double top pattern, Adam and Eve type. I also added 2 weeks ago when discussing the downside, and I quote, "Look to the congestion between 241.05 to 243.40, end of quote. I carried on and I quote, "And the nearby short medium moving average currently at 247.90, and then a bright red lower time currently 242.40 of the ascending wedge pattern with the rising medium moving average below currently at 240.20, and then dark blue lower time of the bullish shift pitchfork currently 236.50. This dark blue lower time is the gateway to a whole load of congestion stretching from 236 down to 216.25, end of quote. Now, I may have detailed the supports below, but the double top pattern which would test these supports has as yet not been triggered. It seems strange, but it is true. You see, the key level is the late September low at 245.90. And though this week last week actually, we have been below that, we have not as yet closed below it, and that is the key triggering event. So until that happens, which is starting to look like it might not now happen, well, it will just be a theoretical exercise. If we do instead travel higher, then look overhead to the dark blue middle time and the bright red trend line. London coffee. Price has made a peak in late April and a low in early May that set up the opportunity for me to draw 16 weeks ago a bullish Andrews pitchfork for the late February to early May action. 10 weeks ago, because of the market actions, I finessed this bullish Andrews pitchfork into a shallower bullish shift pitchfork for the same move, which you can see highlighted on my daily chart in dark blue. Now, I was 4 weeks ago looking to retire it completely, given some of the more recent market actions. However, I've kept it on specifically because of the way the market had been crawling around, along, and on top of the upper time, currently at 50.29. Another pattern to emerge from these times, and highlighted in bright red on my daily chart, is the late April to early September quite large ascending wedge pattern, currently 44.55 to 51.08. The lower uptrend has been further reinforced by the rising mauve medium moving average, currently 45.11, whilst the upper trend line had the benefit of being just above the dark blue upper time. Both the dark blue upper time and the bright red upper trend line were briefly breached in late August, imperfectly I may add, and then properly breached 5 weeks ago, but it seems that 2 weeks ago the breach has been repaired. With a question mark over it, but it has been seemingly repaired, and it does not seem to have been a proper break on either, despite the time the market spent over both. Now, going back to the first full week of August, we saw the weekly key reversal up that led to the creation of yet another pattern, an August-based bull channel, that then morphed and finessed into an early August to late September expanding wedge pattern. I'll speak more on this pattern shortly, but I wish to point out how this all in turn led to another pattern, a monthly key reversal up we saw in August. Thus you can see there's not only a lot concentrated in that 46.82 to 51.48 area, but that each pattern had a link to another and another, and together they helped prices ride higher. Now, 4 weeks ago, I laid out some topside targets for the now large ascending wedge pattern of a target X in the 60.29 area and a secondary harder to reach target X1 up in the 66.57 area. Both of these targets are above my current daily chart, and both I will now retire because at the end of September prices turned south and went back into their respective patterns. And that specifically meant that not only were the topside targets for the large ascending wedge pattern no longer sustainable, but there were now also two new potentials for the break down below the early August, late September expanding wedge pattern. So we've gone out of being an upside attempt into now a downside attempt. So now going back to the expanding wedge pattern, my thoughts 2 weeks ago were that the market could quite possibly be exhibiting cognitive dissonance in having two contrary opinions at the same time, for all the discomfort this may bring. I said at the time, and I quote, "So it could be that short term we see a move back within the bright red rising wedge pattern before a renewed attempt higher to fit in with the larger pattern. I will not set up any targets below as we have not qualified for this as yet, but let's call it a potential. And for this potential I choose, and I mean choose, to regard the action more as an original, very steep bull channel rather than a rising, expanding wedge pattern. This is purely because of my natural conservative nature, I hasten to add. So, we may have a potential down in the 45.65 zone within a fairly free zone between the middle time below and the rising short medium moving average above. I am not in love with this idea, and I would retire it in a heartbeat if I thought it inappropriate." End of quote. In the time since I've said this, we have seen prices head lower, but only as far as the zone around the green short medium moving average, currently at 47.44, and the July high at 46.82. Not enough as yet on the downside. However, there is the possibility that the last 2 weeks may be forming a bear flag or bearish halfway hesitation, but in this we'll have to wait and see. Just be warned in case it does.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.